Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jacobs Solutions Inc. quarterly report. Jacobs Solutions Inc. is a global company that provides a wide range of businesses and services across various industries. At its core, the company offers consulting, planning, architecture, design, engineering, and infrastructure delivery services. These services include project management, program management, construction management, and long-term operation of facilities. The company's expertise extends to multiple sectors, including consumer and manufacturing, defense and security, energy and utilities, financial services, government, health and life sciences, and transport. This diverse range of services allows Jacobs Solutions Inc. to cater to the needs of various clients across different regions, including the United States, Europe, Canada, India, Asia, Australia, New Zealand, the Middle East, and Africa. In essence, Jacobs Solutions Inc. is a one-stop shop for infrastructure development, consulting, and project management services, making it a trusted partner for businesses and governments worldwide. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a company's stock price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various factors that impact its financial performance and market perception. One possible reason for a lack of significant change in Jacobs Solutions Inc.'s stock price over the past year could be a stable revenue growth rate, which may not be exciting enough to drive investor interest or expectations. Another factor contributing to this stability might be the company's consistent dividend payments, providing investors with a steady income stream and reducing volatility. Additionally, Jacobs Solutions' diversified business portfolio, including its engineering, construction, and technical services, could be spreading risk and maintaining a stable stock price. Furthermore, the absence of significant news or events that would normally impact a company's stock price, such as mergers and acquisitions, major contracts, or changes in leadership, might also contribute to the stability. It is also possible that investors have already factored in Jacobs Solutions' growth prospects and financial performance into its current stock price, making it less susceptible to significant fluctuations. In conclusion, a combination of stable revenue growth, consistent dividend payments, diversified business portfolio, and lack of significant news or events might be contributing factors to the stability of Jacobs Solutions Inc.'s stock price over the past year. Jacobs Solutions Inc. maintains a market capitalization of $16 billion, broadly in line with the industry peer group. Jacobs Solutions Inc. trades at a higher price-to-earnings ratio of 35 times and a lower price-to-book ratio of 4.35 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 59% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count while revenue has grown, but declining assets and equity suggest buybacks may be taking precedence over reinvestment. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a review of various segments and factors. In terms of revenue growth, 2 key segments have shown significant increases: Infrastructure and Advanced Facilities, I&AF, and PA Consulting. The I&AF segment has experienced a 12% increase in revenue, while the PA Consulting segment has seen a 15% rise. This growth can be attributed to several factors, including the increasing use of data science and technology-enabled expertise in the I&AF segment, the expansion of high-end advisory services through the PA Consulting partnership, and growing demand for digital solutions and cybersecurity services across both segments. Additionally, stronger performance in international and global operating sectors within the I&AF business has contributed to revenue growth. Furthermore, year-over-year revenue growth in the PA consulting business, and a favorable foreign currency translation impact of $37.9 million have also played a role. In contrast, revenue decline has been observed in certain regions, such as Asia and India, where revenues decreased by 2.8% and 8.6%, respectively. However, these declines are relatively small compared to the significant growth experienced by other segments. Overall, the data suggests that revenue growth is driven primarily by the I&AF and PA consulting segments, while revenue decline is largely limited to specific regional markets. The net income of the company underwent a significant transformation over time. Initially, the company reported a loss of $5,003,000, but this was later turned into a profit of $133,668,000. This change in fortune can be attributed to various factors, including a decrease in losses on investment in equity securities and an increase in depreciation and amortization. The profit margins also underwent some changes during this period. The gross profit margin decreased from 24.6% to 23.2%, indicating that the company's ability to maintain its pricing power and control costs was affected. However, the operating profit margin remained relatively stable at around 7%. This suggests that the company's operational efficiency and cost management were not significantly impacted. The net income attributable to Jacobs also saw a significant increase from -$18,130,000 to $125,508,000. This improvement in net income can be attributed to the overall growth of the company's profitability and its ability to manage costs effectively. Overall, these changes indicate that the company has made progress in improving its financial performance over time. The company's financial performance is a key indicator of its overall health. One crucial aspect to examine is the generation of positive operating cash flow. According to the provided information, the company has indeed achieved this milestone. As per the data on page 13 and page 49, the net cash provided by operating activities for the 3 months ended December 26, 2025, stands at $380,760. This significant figure indicates that the company is generating a substantial amount of cash from its core operations. The positive operating cash flow suggests that the company's business model is efficient and profitable, allowing it to generate sufficient funds to meet its financial obligations. This achievement is a testament to the company's ability to manage its finances effectively and make timely payments to its creditors. Furthermore, the generation of positive operating cash flow provides the company with the necessary liquidity to invest in growth initiatives, pay dividends, or repay debt. Overall, the company's positive operating cash flow is a positive indicator of its financial stability and prospects for future growth. The company's debt level and interest expenses have undergone significant changes in recent periods. An increase of $249,566 in total long-term debt from September 26, 2025 to December 26, 2025 indicates a substantial rise in the company's debt burden. Furthermore, long-term borrowings increased by $245,000 in 2025, suggesting that the company has taken on more debt during this period. The increase in debt level has also led to a significant rise in interest expenses. Net interest expense increased by $1.5 million, 5.8%, from $25.2 million to $26.6 million, indicating a substantial burden on the company's bottom line. This increase in interest expenses is likely due to the higher debt levels and the associated interest payments. Overall, these changes suggest that the company's financial situation has become more challenging, with increased debt and interest expenses putting pressure on its profitability. Management is signaling a significant shift in the company's strategy with several key initiatives. Firstly, they are adopting new accounting standards that will have a substantial impact on their financial statements. This change is expected to affect their effective tax rate and consolidated financial statements. In terms of financing, management expects to rely heavily on cash generated from operations to fund growth and operations. This approach suggests a focus on organic growth rather than external funding sources. The company is also undergoing a transformation through the combination of its infrastructure expertise with PA Consulting's strategic advisory capabilities. This acquisition, valued at approximately £1.216 billion, is expected to close in the second quarter of fiscal 2026. The integration of these two entities will likely drive significant changes within the organization and position it for future growth. Overall, management's outlook suggests a focus on organic growth, operational efficiency, and strategic transformation through acquisitions. These initiatives are aimed at positioning the company for long-term success and growth. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company acquired a 65% stake in PA Consulting Group Limited in fiscal 2021. Additionally, two other significant acquisitions were made: BlackLynx, which brought digital and data business solutions on board, and Streetlight, although specific details about this acquisition are not provided. The company has also engaged in divestitures, including the sale of PA Consulting transaction, but no further details are available regarding this transaction. Another divestiture is mentioned, but it is unclear whether it was an asset or equity sale. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out a significant amount, with $38,558 in Q4 2025 and a quarterly dividend of $0.36 per share declared on January 29, 2026. In addition to paying dividends, the company has also engaged in share buybacks, allocating a substantial sum of $252,082 in Q4 2025. Furthermore, the company has authorized a total amount of $2.5 billion for future share buybacks, indicating its intention to continue returning value to shareholders through this means. Overall, the company's actions suggest a strong focus on shareholder value creation, with both dividend payments and share buybacks serving as key mechanisms for achieving this goal. That concludes the financial summary for Jacobs Solutions Inc. Feel free to comment below, and I will be happy to answer them when possible.